Good morning, multi-bagger hunters. Welcome back to the Daily Hunt for Tuesday, March 31st, 2026. We've got a busy show for you today, diving deep into the market chatter from yesterday, March 30th.
That's right, Ethan. Our AI systems flagged a significant number of posts, a real flurry of discussions, actually, across quite a few different stock symbols. We're seeing a fascinating mix of, well, really enthusiastic bullish sentiment, especially around some emerging tech and AI plays, but also, some very pointed risk assessments that challenge those assumptions. So the overall market sentiment, I'd say, is quite a dynamic blend of promising growth narratives and some underlying, let's call them cautionary flags.
Absolutely. Let's jump straight into it. First up today, we're looking at ExxonMobil Corporation, XOM. Now, XOM was a buy for us back in January, and the community sentiment continues to be quite bullish. We're seeing mentions of it being, the largest oil company, trading very close to its 52-week high and benefiting immensely from, frankly, the energy landscape. Plus, the Golden Pass LNG project just started production, which is a huge positive catalyst for future growth. And we're seeing strong insider buying, which is always a great sign.
Well, Ethan, while the insider buying is certainly a strong signal of confidence, and the Golden Pass LNG project does present new revenue streams, we can't ignore the historical KPIs entirely. Its revenue growth has been negative year over year, which the LNG project could change, but hasn't yet. And while a low beta of 0.348 indicates stability, it also means it's less volatile than the broader market, which might not be what our multi-bagger hunters are looking for in terms of explosive returns. It's solid, yes, but let's be realistic about its potential to move dramatically upwards from here.
Fair points, Brooke, fair points. But the general sentiment is that betting against XOM right now is a losing strategy. For today, I'd say XOM is a buy. Next, let's talk about NVIDIA Corporation, NVDA. This one has been a roller coaster for us, moving between buy and stay away frequently. Today, we're seeing some posts suggesting it's oversold and at lower support areas, presenting a buy-the-dip opportunity. We're talking about incredible revenue growth of over 70%, stellar net profit margins, and significant insider buying. It's still the dominant player in AI, with new chips on the horizon. The AI infrastructure boom is not going anywhere.
Ethan, I hear the enthusiasm, but we have to look at the numbers and the broader market view. While the fundamentals are undeniably strong, the price-to-earnings ratio of nearly 34 is a major concern for many users, who view it as overvalued, especially if we're in a more cautious market environment. Then there's the incredibly high debt-to-equity ratio of 7.255. That's a serious red flag, indicating significant financial leverage. And with a beta of 2.375, this stock is exceptionally volatile. We're seeing institutional investors like Cathie Wood reducing their stakes, and there are valid concerns about supply chain disruptions, like helium shortages for chip production, that could impact future performance. The core business is strong, sure, but at this valuation with these risks, it's just too hot for a general recommendation.
Okay, Brooke, you've certainly highlighted some critical risks there. Given the mix of conflicting signals and your strong cautionary points, for today, my final verdict on NVDA is stay away. Let's pivot to Amazon.com Inc., AMZN. The discussions here are quite positive. Users are pointing to AMZN being at lower support areas and expecting a rebound. We're seeing strong insider buying, over 1.1 million net shares purchased, which is a huge vote of confidence. Analysts are maintaining a buy rating with targets significantly above the current price, and some even suggesting it's at a historically low valuation for its growth potential. Plus, its core online store strength continues, and its AI initiatives are attracting investor attention. This stock has consistently been a buy for us.
Well, the insider buying is compelling, I'll give you that, and a 13.6% revenue growth is solid for a company of Amazon size. However, the sentiment around AI and the broader tech sector isn't uniformly rosy. There are concerns about potential tech sector weakness and even the loss of a key AI chip executive. While the fundamentals are robust, we still need to be mindful of external headwinds. But the technical indicators and insider activity are strong here. Precisely. Combining that with the fundamental strength, I'm comfortable saying AMZN is a buy. Next, for Oracle Corporation, ORCN. This stock has unfortunately been a consistent stay away for us on the show. However, I did spot one bullish user mentioning the potential impact of a TikTok deal and ties to, a certain former president. There's even a technical assessment suggesting it's bullish in the intermediate term, and news of surging AI revenue, which is a positive catalyst. Ethan, that's incredibly speculative, and it's a lone voice in a sea of skepticism, quite frankly. the predominant user sentiment is quite bearish, with many calling ORCN a risky mess and questioning its fundamentals. Our KPIs back this up with an alarmingly high debt-to-equity ratio of 415.265. That's not just high, it's astronomical and indicates severe financial leverage. The stock is also significantly down from its 52-week high, and we're seeing net insider selling. The AI revenue surge is positive, but it's also raising questions about dividend and debt sustainability. This is simply too much risk.
Given that overwhelming evidence, it's hard to argue with. ORCN is a stay away. Moving on to another tech giant, Microsoft Corporation, MSFT. MSFT has been a frequent buy for us on the show, and the bullish sentiment continues to be strong. The posts highlight its incredible resilience to energy costs, thanks to long-term contracts, and robust operating margins of nearly 47% in cloud services. Even if the AI boom slows, their diversified business from cloud to gaming with Xbox makes them incredibly stable. Analysts are even projecting up to 90% upside. With new Copilot advancements and a reasonable PE, this is a growth powerhouse.
While I agree that Microsoft's fundamentals are robust and its margins are indeed impressive, we did see Cathie Wood selling off a chunk of megacap tech, including MSFT. And our insider trade data shows slight net insider selling over the last 6 months, not buying. While these aren't deal breakers for a company of Microsoft's caliber, they do inject a note of caution, Geopolitical supply chain risks, while not unique to MSFT, are always a factor in tech. However, its financial strength is undeniable.
You're right, Brooke, those are points to consider. But the overall picture here is still one of immense strength and potential. So MSFT is a buy. Finally, let's discuss DataVault AI Inc., DVLT. This company is generating a ton of buzz. We're seeing posts highlighting its strategic move into tokenized assets, the acquisition of NYIAX, its connection to Nasdaq's framework, and the SEC's approval for tokenized securities. The narrative is that DVLT is building the plumbing of future financial systems and aiming for a potentially massive market beyond traditional crypto. They've announced their first profitable quarter and aggressive 2026 growth targets, like jumping from $39 million to $200 million in revenue. And get this, insider buying is phenomenal, with 86.62% net shares purchased. This feels like structure, not just speculation.
Ethan, I understand the excitement, but we absolutely have to pump the brakes on DVLT. While the sentiment is indeed highly bullish, our KPIs tell a very different story. The claim of 1,362% year-over-year revenue growth in the posts dramatically contrasts with our trailing KPI of just 36.496%. That's a massive discrepancy we need to verify. More critically, the company still shows negative net profit margins and EPS historically, despite one profitable quarter. One profitable quarter does not equate to sustained profitability. And let's not overlook the sky-high debt-to-equity ratio of 6.435, which is a significant financial risk for a small-cap company that's not yet consistently profitable. The stock has also plummeted from its 52-week high of $4.1 to just $0.555. This is a highly speculative venture betting on future potential, not current financial stability. The insider buying is a strong positive, but it's not enough to overcome these fundamental risks for a general investment.
Wow, Brooke, those are some really stark facts, Despite the palpable community optimism, your points on the financial health are too compelling to ignore for mainstream investors. So DVLT is a stay away. All right, to wrap things up, here's our compiled list of today's candidates based on our AI-generated insights and market commentary. Investigate as buy, ExxonMobil Corporation, XOM, Amazon.com Inc., AMZN, Microsoft Corporation, MSFT, Meta Platforms Inc., META. Investigate as cautious buy, none. Investigate a speculative gamble, DataVault AI Inc., DVLT.
This podcast is for informational and entertainment purposes only. The content is generated by artificial intelligence and does not constitute financial advice. Listeners should conduct their own research or consult a licensed financial advisor before making investment decisions. We are not responsible for any losses incurred. The market is a wild place, and knowledge is your best asset.
That's all the time we have for today. Thanks for joining us on the Daily Hunt for Multibaggers. We'll be back tomorrow with more insights.
Until then, happy hunting.